You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is that time of the week, listeners. Time to break down all the wild action in the world of futures options. Yep, it is time for TWIFO. My name is Mark Longo from the THEOptionsinsider.com, as well as from the ever-scintillating, ever-engaging network upon which so many of you are mainlining these days. If you like what you hear, hey, you've already downloaded the show. You've already cost us some bandwidth. Pay it back with a little bit of the old ratings, reviews, stars, wherever you get this content. It's available everywhere. Whatever your platform lets you do. It does help new people continue to discover this show that has been running for a long time. And, of course, if you want more in your lives, and who doesn't, theoptionsinsider.com/pro, the place to go for exclusive shows, options oddities, pro Q&As, every single freaking week, 200-plus episodes ready for you the second you hit the button. Live access to everything we do, and a whole bunch more. Giveaways, theoptionsinsider.com/pro. And occasionally, if you want full deep dives into the world of futures options, we welcome on to the Pro Q&As our friend who's joining us today on the old CME Group hot seat, none other than our old friend, Mr. Dan Gramza, the president over there at Gramza Capital Management. Mr. Dan, welcome back to TWIFO, sir. It has been, a month or two. How you doing, sir?
I am doing terrific. Thank you. All is good. Interesting day. Can't wait to jump into these markets with you, Mark.
All right, then let's do it. Let's jump right in. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything moving to the light side and to the dark side over there at CME Group this week. Mr. Dan, where should we begin our journey this week, sir? To the light side or to the dark side?
How about the light side?
All right. I think we can make that happen, listeners. And looking at the chart this week, table, the graph, call it what you will, you guys can see this for yourselves if you follow CME Group or us over there on Twitter. At Options, of course, is where you find us. And this is an interesting one this week. If you look at the full table, it's pretty heavily to the green. Looks like, I would say, around 75-25 green over red this week, but still enough to make a bottom five. And a lot of light side to choose from. We're going to squeeze it just to 5 this week, listeners. Number 5, out to precious metals first. It's palladium, up 3.52%. It was number 3 in the other direction last week, off 6.4%. Before you get all hot and bothered, you say, Mark, can you guys go sink your teeth into palladium? We would love to accommodate you, but a whopping 12 contracts on the tape so far this week. So spoiler alert, probably not heading out to palladium. Number 4, we're going off to ags. It is oats, up 5.44%. It was in the exact same spot last week, up 3.92%. Once again, before you send in the request, before you hit the send button on your tweet or your email saying, what about oats? 8 contracts. So probably not going to hang out in oats. Number 3, back to the metals. It is platinum, up 5.66%. A little more respectable than palladium. We go from 12 contracts to 2,900 for platinum, but still obviously not a Rock'em Sock'em Robots product. On number 2, we're still staying in the silver. I should say it's staying in the silver. We're still staying in the precious, listeners. It is silver, up 7.04%. Obviously, silver, much more respectable. 40,000 contracts on the tape, so a lot for us to analyze there. And the number 1 light side mover, getting out of the metals, back to the ags, listeners. It is soybean meal, up 7.59%. And again, that one popping off this week as well. 60,000 contracts on the tape out there. So we could certainly do a little damage out in soybean meal. Now to the dark side we go. And again, like we said, not a ton of dark side this week, but enough for, I would say, probably a bottom 10, but that's about it. Number 5 to the dark side, it shows you how light things are. It's WTI. It's only off 1.41%, but it's enough to make it into our dark side this week, listeners. So kicking things off to the dark side and energy. Number 4, back to the ags, back to that same complex we were just talking about that topped the light side, the soybeans complex, this time to soybean oil. Number 4, off 2.3%. It was number 3 in the other direction last week, up 5.25%, so giving about half of that back. Again, a pretty busy week there, 120,000 contracts on the tape, so pretty much exactly 2x what we're seeing in soybean meal for soybean oil. Number 3, we're staying in the ags, this time to the dairy. It's class 3 milk, off 3.59%. It was number 5 in the other direction last week, up 2.1%. And before you ask, 4,500 contracts. So it's certainly not nothing, but it's also not the most explosive of contracts on the tape. And then number 2, from the ags, we go off to energy. It is nat gas, off 3.76%. It was number 1 in the other direction last week, an explosive 17.37% to the upside. So giving a little bit of that back, obviously still net up quite a bit over the last couple of weeks. And the number 1 dark side mover this week, probably catching a lot of people by surprise. It's a Bitcoin, off 5.91%. It was number 5 in the same direction last week, off 3.98%. So a little bit of summertime crypto malaise going on out there. So a lot to unpack. Dan, our movers and shakers this week covered a variety of complexes. We've got ags, we've got metals, we've got crypto, we've got energy. Where should we begin our journey this week, sir?
Well, how about if we start with that energy?
I think that's an excellent choice. It's like you and I are on the same wavelength, sir, because I already have nat gas up on my screen as we begin our journey in energy, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, it does seem like nat gas is inescapable. By the way, we have 2 of our 3 frequent offenders in our light side, dark side movers and shakers this week. All we're missing is lumber, which maybe we need to revisit lumber's inclusion because it was the dominant product from a vol perspective for several years there. It seems like maybe it has settled down a little bit. Dead trees, finally, settling down out there. But Bitcoin and nat gas, number 1, number 2 to the dark side this week. So they're certainly not giving up the ghost. You know where to find all this fun, listeners. CMEgroup.com/TWIFO is the place for you to follow along with the show. And then from there, you're going to scroll down 3 slots, go from ags down to energy, and then into the product family, go down another 3 slots to natural gas. And that's where we're going to begin our journey this week. Nat gas hanging out right around $2.50 this week, $2.51 right now, listeners, off about 4 cents since Monday. Of course, you go back to our show last week, off nearly 4% after the end of our show last week. It's like some labor resolutions going on out there in the nat gas space, which maybe seems like it's easing some of the price concerns we saw looming out there. A decently active week, though, out there in nat gas. Usually, like I say, this time of week, we expect somewhere around 400 to 440, maybe 450 in terms of contracts on the tape. This week, 472,000, so looking a little bit beyond that. And of that, about 37% of that coming in the October contract, which has 33 days to go. So probably going to be hanging our hat out there. But Mr. Dan, I'm sure these days over there at DanGramza.com, a lot of people are hitting you up, asking you all about the whipsaw machine that is nat gas, sir. What is catching your eye out there this week?
Well, I would say, Mark, what I call consistency of behavior. And here's what I mean by that. When I look at a chart on a market, I do look for certain characteristics, which I call behavioral characteristics. So I look at a candle chart, but I don't focus on candle patterns. I focus on the characteristics of it. What is it that you and I see? Do we see clues that buyers or sellers may be coming into the market? And it's based on what you would see on the floor, for example, what a market maker sees, and that's order flow. Is there a bias to it? Now, let's talk about nat gas. What I find interesting, what I consider consistency, is if you look at nat gas, and we hit it today at 245, that is between that level and 250, actually. We have been there now, today, the 4th time. Every time in the previous 3 times that we've been there, we found buyers. The market moved away from that level. And one of the things, when you look at commodities and you see that kind of behavior, it oftentimes implies hedging. It's a level that was attractive before for buyers, and it could be people putting on hedges. They feel it's cheap enough. They may want to lock in these prices. And that's kind of the indication we're getting today, that the market did get low enough to find those buyers. Now, on the other side, what's interesting, Mark, is today we did rally. We got up to like 256, but as you mentioned, we're around 250 right now. So we didn't hold those highs. Buyers did come in, but they also backed off. So at the end of the day, if we finish like we are right now, it's a very neutral setting. It implies a transition from the selling that we've seen over the last few weeks in this market. So I'd be cautious if you're on the short side. And if you're looking for this to be that another low like we've seen previously, then the next 3 to 5 trading days, I think, are going to be critical. So ideally, by the close of Monday, Friday could stay somewhat neutral, but by the close of Monday, you'd want to be trading above 260. And by the close of Wednesday, you want to start approaching between 265 and 270. If you see that kind of movement, then we may have a chance for another rally in this market. And where we've seen sellers coming in before is that $2.80 to $3. So if we do get some movement, you want to see how quickly it moves. You want to see a market that goes up the way it came down. It kind of fell out of bed for a few of those days, and you want to see the same kind of reverse action going to the upside. It says that the buyers did come back in, and they're behaving consistently. And that means we're seeing this market momentum building over those next 2 to 5 days.
Yeah, I definitely agree with you. This 2.5 level does seem like kind of the Goldilocks level for nat gas out here, where people are kind of just settling in at this level. If it gets a little higher, threatening the 3 handle, people think, maybe this is overdone, or they're getting excited to the upside. You get around 2, and they start maybe looking at a lot of downside action. Right now, you're right. It's kind of like vacillating. I don't know if people are too excited on upside trades right now or overly enthusiastic about loading up on a bunch of downside because you only have, 2.5 points worth of downside in front of you. And nat gas probably, and we can't say anything with certainty, isn't going to zero or below anymore, given what happened to WTI a few years ago, but probably not going to zero anytime soon. So intriguing stuff out there. This 2.5 level, listeners. We've had guests come on, like, Carly Garner and others. When he got down to like 2.25, that's when people start getting excited about some upside. Maybe there's some upside room to run here up to the 3 level. 2.5, you can certainly maybe say there's some of that. But it's an interesting kind of Goldilocks level where we kind of settle out and seem like we hang out here for a little bit. Looking at the term structure, it does get obviously a little bit seasonally juicier if you go out into the winter time frame, obviously. Looks like in the near term, we peak on the nat gas futures here, listeners, at $3.81. That's on the Jan contract there. So again, talking about seasonality, nat gas, obviously a product that has a high degree of seasonality. January, you're right in the teeth of winter there, so you expect some premium. So a pretty steep contango between this front contract at a $2.50 and going out to Jan of next year. Even the D's contract's at about $3.50. So you're talking about $1 worth of seasonality baked in there as well. So intriguing stuff out there, but let's get out into the October contract. That's where 37% of the paper is going up this week. That contract a little bit higher as well, 263 right now. So we'll be hanging out there. What is the vol right now in October, listeners? About a 68, off about half a point. Obviously, still very respectable. We have seen in the past, in fact, that SEP contract with 4 days to go. So vol, kind of a bit of a misleading number with only 4 days to go. But that one's still hanging out about a 53. So shows you we have had 50 handle vol and nat gas for a while. I said at the time, that's kind of low. You might want to be cautious at selling that level. Maybe look at some long premium type strategies. We are seeing the vol a little bit firmer out there now, threatening a 70 out here in October. In terms of skew, the puts 2% bid last week. This week, 3.4% bid. So ticking up a wee bit. The calls last week, pretty much exactly flat. So no premium, no discount, no nothing. This week, coming in a little bit about 2% cheap. So we have a modest bid to the puts, a modest discount to the calls in the October cycle, but nothing to really write home about. And it looks like Dan was talking about maybe we're starting to get a little bit of hedging action out there. That does seem to be the case with the 2 puts lighting it up for the number one spot this week. 23,000 contracts on the tape. The big day Tuesday, about 10,000, mostly closing there. 6,300 today, 4,200 yesterday, 3,000 on Monday. Looks like back and forth opening to closing throughout the week here on these 2 puts. We have seen action on this 2 strike in the past. Whenever we start to get down around these levels, does seem like 2/4, 1 3/4 puts are the order of the day out there. Also with a healthy smattering of some 3 calls. Maybe we'll find some of those today. 2/4 puts right behind it, 18,000 of those also going off this week. The big day for those actually today, 6,000 today. So maybe a 2/4 put vertical going up today. 5,000 yesterday, 3,500 on Tuesday, 3,400 on Monday. Again, looks like back and forth opening to closing throughout the week there. And then right behind it, we do have some calls. We have the 3 calls. So there you go, playing all the hits this week. 2 puts, 2/4 puts, and now the 3 calls. 16,000 of those on the tape. The big day actually yesterday, about 4,900, slightly closing there. So maybe some folks getting the heck out of Dodge on these, deciding maybe the 3 strike not going to happen anytime soon. Who knows? 4,600 today, so pretty even paper yesterday and today. 5,000, actually 5,100 on Tuesday, slightly opening there. 1,500 on Monday. So actually opening on the 3 calls earlier in the week, closing later in the week. So that is mildly intriguing. Maybe we have some overwriting paper going on earlier in the week as well. Let's jump around a little bit, listeners, see if we see any other interesting and or aberrant paper. How about some 2 3/4 puts going up out here in November? Worth noting the November future. You might say those are in the money puts, but no, the November future, again, getting to that seasonality, listeners, is at about close to a 310. So the 2 3/4 puts still out of the money there. They went up about 7,000 times. Does seem like maybe that could be a roll as well. There's 7,500 of the 2.5 puts going up this week in January as well. So maybe a bit of a roll, similar size paper going up in November. And worth noting, though, the Nove is all opening and trading all week long. 3,000 today, 3,000 yesterday, almost 1,000 on Tuesday, 600 on Monday. Opening all week long on the 2 3/4 puts in November. So interesting versus, let's see, the 2.5 puts. Those were traded 4,000 today, 3,500 yesterday. So certainly not even paper, even if the overall size lines up. And it looks like it was pretty much all opening on those trades as well. So opening, maybe a bit of a calendar spread legging in out there. It seems like this week's strip listeners coming down a little bit. It is the 5 calls. That is the strip du jour in nat gas this week. 1,950 is the size. It's like it goes all the way up from, looks like April of next year all the way out till the end of the year pretty much. So intriguing stuff. Mr. Dan, any of that come as a surprise to you? Sounds like you anticipated a lot of it. You talked about hedging paper, and we are seeing the 2 puts in October leading the dance this week, sir.
Yeah, no, I think it seems somewhat logical and somewhat orderly, I guess, Mark. The other thing we can think about when it comes to nat gas is its consumption pattern. We use about a third to heat our homes and to cook our food. We use about a third industrially, the chemical industry, steel industry, and then we use a third of it for electricity production. And with the hot temperatures that we've seen coming across the country, we want to remember that we produce more electricity with natural gas than we do with coal, for example, in our country. So those all have demand aspects when it comes to nat gas. But the other side of that is we have a lot of supply out there. And so we haven't seen a squeeze in that regard. Europe actually is not in bad shape when it comes to nat gas supply. And some of our supply also goes to Asia. So we're somewhat of a balanced situation globally on the supply side right now. So this is a market waiting to do something. And I would think the bias would be for a move to the upside.
Waiting to do something indeed. Since we're hanging out in energy, let's quickly head out to the world of WTI as well, see if they're waiting to do something. You know, we say about how 2.5 is kind of that Goldilocks level for nat gas. It does seem like 80 is a level a lot of people are watching out there in WTI as well. Coming into the start of the show, we are about a point below that, right around 79 right now, off about 1.6 handles on the week, or a little over 2%. Not the most active week out there in WTI, 343,000 contracts. Again, that's not nothing. That's many times a lot of the other complexes we could talk about today. But it's not the 4 to 450 we've come to expect this time of week as well. It looks like nearly half of that, 42% going up in the October contract that has about 22 days to go. Mr. Dan, obviously WTI on the thoughts of a lot of people, of all these headlines coming out of OPEC these days and what's going on out there, sir. What's catching your eye in the world of WTI this week, sir?
Well, right now, I think WTI is at value. Where we're sitting, let's say between $78 to $84, $85. That's about where I think it should be from a value point of view. And I could see us staying in this range. Russia had their cut. OPEC had their cut. The market somewhat adjusted to it. Iran came out and said that they're up to 3.4 million barrels per day, which really surprises me. That must be near their max capacity, I would think, but maybe things have changed over the years for that country. So we are seeing some supply coming in that I don't think people were contemplating from a global point of view. I guess the way we could think about this is that globally, we consume about 100 million barrels a day. The United States consumes about 20% of that, around 20 million barrels a day. We're producing in the double digits, so we're above 12 million barrels per day. Russia and Saudi Arabia are the only two other countries that can produce, above 10 million barrels a day. Russia's less than that right now. I think Saudi Arabia is also. So we're seeing a marketplace that is also somewhat balanced. If you look at the Middle East, a lot of the countries said, $80 a barrel, life is good. We're happy. Saudi Arabia originally said they wanted $100 a barrel. And the other countries, I'm sure, wouldn't kick back on that either. But I think that global situation is somewhat balanced. The variable here, Mark, that I find interesting, and that is China. China has not come back the way people expected after the pandemic restrictions. So it's affected not only this market, but a variety of other markets. That demand that the marketplace was contemplating from China just is not appearing. And so until that gets turned on, if it does, some people are saying that is China where Japan was in 1990. And Japan never really recovered from that. Is this where China is? So there's a lot of doubt swirling around in that, and it bleeds into a lot of the markets that you and I have to look at. WTI is one of those markets. I think on a near-term basis, if we look at what we see today, it's bouncy. Last 2 days, as we got below 78, buyers came right back in. So they're supporting that level. And just like we talked about with nat gas, is that action? Is that hedging? People are saying, okay, 78 mine at 78. And it appears that's the kind of action. But just like with nat gas, if that's true, then we want to see their footprints continue. And that would mean over the next 2 to 5 days again, we'd want to see this market within 3 days, ideally, kissing $82 a barrel. You'd want to be up there. That would give us the right kind of momentum to the upside. So if we were looking at bullish option strategies and we are looking at those over the next couple of days, I think that momentum is what we'd want to see for us to stay in those trades. You know, one of the things that from my own personal point of view, when it comes to an option trade, I do not want to switch to a hope trade. When I set something up, I look for certain behavior to occur in a certain amount of time. If it doesn't, then I'm probably in that hope trade. I hope it gets up there, or give it a little more time. In my experience, a little more time can be so expensive. So this is an example of a setup that if it's true, then we need to see, we want to get paid for the trade is what it comes down to. So I think the next 5 days or so in crude oil to the upside will be important. So if we get up near $81 and we start to stall out a bit, then look for a sideways move, for example. I wouldn't look for it to go much higher.
All right, let's parse what we're seeing out here in WTI. Like we said, kind of a light week, 343,000 contracts. Again, most complexes would kill for that, kind of light in WTI. 42% coming in the October contract, so we're hanging out right there, right at the 79 handle as we're kicking off this segment, listeners. What is the vol in October crude oil? About a 28 even, listeners, up about 0.15, so not a huge move from a vol perspective out here either. In terms of skew, let's see, any evolution? Not much there either. 6.5% bid with the puts last week, 7.4% bid this week, so slightly richer the puts this week, not even a point. The calls last week, 4.8% cheap. This week, 4.9% cheap. So a little bit of evolution, a little bit more juice on the puts, but not a ton to write home about. Let's see what we find out here from an overall size perspective. And again, kind of show you what kind of a light week it is. A little bit less than 10,000 calls is our biggest trade of the week out here. It's the 83 calls in October going up 9,666 times. Pretty much half of that, 4,800 going up on Monday, mostly opening there. 2,500 today, 1,700 on Wednesday, a few hundred on Tuesday. So it's like opening earlier in the week and probably closing looks like the rest of the week. So not even 10,000 contracts. Again, bit of a light week. Right behind it, we have the 90 calls. So that's quite a jump from the 83s to the 90s, going up 8,500 times. It's like folks were bailing on those most of the week. The big day was Wednesday, 3,000, 2,400 on Monday, 2,100 on Tuesday, about 800 and change today. Looks like, again, closing most days this week, slightly opening on Tuesday. So interesting, 83s and the 90s, and then right behind it we have the 85. So a bit of a call Call strip in October going up 8,200 times this week. Those more active throughout the week, 2,400 today, 2,500 yesterday, 1,500 on Tuesday, 1,800 on Monday. It's like closing on Monday, opening the rest of the week. So interesting patterns of liquidity up here in the call wing in October for WTI. Not to be forgotten, we do have some puts lighting it up. 6,700 of the 75 puts also in October. Again, kind of back and forth, opening to closing. The big day was Wednesday, about 2,100, slightly closing there. 1,700 on Tuesday, 1,600 on Monday, 1,200 today. It was like opening throughout most of the rest of the week. So kind of a light week out here in WTI. I'm just scanning to see any interesting and or aberrant paper. How about the Jan 54 puts? They went up 1,500 times this week, listeners. Paper opening on Wednesday. Probably a bit of a sale if past is prologue, but who knows? Interesting stuff out there. We also have, usually this time of week, we maybe can count on a couple of interesting upside plays, but not much of that really this week as well. Not a ton lighting it up in the other contracts. So I think we're going to keep on rolling instead. Mr. Dan, we've hit on the key players in energy. What is lighting up your tape? Which complex should we venture to next, sir?
Well, what do you say we go to equities?
I think we can make that happen, listeners. To the wild and woolly world of equities, we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. Pop out of that energy complex. Go down just one slot to equity indexes. We're going to hang out in U.S. Index E-mini. Where we go from there, it's a dealer's choice. Probably going to kick things off, though, in the E-mini S&P 500. It is the big dog out there. And let's see, volume-wise, looking pretty respectable this week. 3.4 million contracts. We were just talking on our option block show earlier about how SPY and the SPX, even on a day when VIX is not really putting up much paper, they're blowing the doors off from a volume perspective. So these whipsaw-y type of days, VIX usually likes them as well, but today not so much. But the S&P clearly likes a good whipsaw out there from a volume perspective. And how's all this whipsaw action? How's it playing out from a vol perspective? Right now, VIX, when we kicked it off, we were just starting to see this sell-off that we're seeing out there today exacerbate. So vol was rallying earlier in the morning, then it started coming off. By the time we got to our option block show, we were back in a 15 handle. Now, as we're coming halfway through this show, we're back threatening a 17 handle out there. It was at about a 1660 when we kicked off the show. That was down 0.6 of a point still from last week. But of course, if we re-racked that now, it would probably be even higher. Yeah, we're 16 3/4 now, slowly threatening that 17 handle again. VVIX at about a 90 when we kicked off the show, down a little over 14 handles from where it was this time last week. VVIX, of course, the volatility of volatility. It was north of triple digits this time last week, so coming in quite a bit out there. And then vol Q, the at-the-money vol of the NASDAQ 100, just a little bit shy of a 20 even. That down about 0.4 of a point. So that spread is right around 340 between the VIX and vol Q right now, which is about 0.2 of a point wider than we have seen it last week. And again, that's a decently wide level, all things considered, out there. But it's not ridiculous either. Let's see if we can find any ridiculous paper out there. But before we do that, while I'm looking for some ridiculous paper in the E-mini S&P 500, Dan, I know people are just, I'm sure, just besieging you with questions about what's going on out there in the E-mini right now, sir. What is catching your eye out there in yet another whipsaw day in a very whipsaw-y market, sir?
Well, first, I was not contemplating what we're seeing today. Excuse me. In my video yesterday, I was looking for this market to work its way higher, basically be an inside type day. We are, but not with this kind of volatility that we're seeing. I was looking for more of a rest day before we get to Fed speaking on Friday. And what's interesting about this, if we think about how we started out with really a lot of enthusiasm. You know, with NVIDIA, they had their blowout earnings, they had upbeat forecast. So I think that kind of, a rising tide raises all the boats, and we saw that at the beginning. But we haven't had any dramatic fundamentals also driving? Well, we had durable goods coming out for July. Durable good orders, those are things that we buy that last more than 3 years. So appliances, autos, things like that. But that was down by 5.2%. It's the lowest it's been in 3 years. So we're seeing some weakness there. The weakest part of durable goods was transportation, and that was down 14.3. So that really got hit. So what does that say, though? It says something about our economy. Another factor that we had coming in there was mortgage rates. They were up to a 22-year high at 7.33%. Jobless claims were down. But the bottom line, the economy is slowing down. So what is the market saying, or what is the market thinking? Please, Fed, leave this alone. Don't change anything. Don't add to those interest rates. And there's a few things I find interesting. Now, the ECB and the Fed are going to be speaking on Friday. And one of the things that I would see, especially when I was at banks in Europe or in Asia, when we're coming into something fundamentally that the market is thinking could be earth-shattering, people have a tendency to go neutral. A lot of the trading desk that I would see at these banks, they go neutral as we come into the reporting period or the announcement period. And you'll see that in futures because these trade, they trade 23 hours a day. So what you want to look at, and the way I break it down, is I look at when we finish today in Chicago, 5 o'clock Chicago time, Asia starts a trade. And then at 1 or 2 o'clock in the morning, Europe starts a trade. Now, they give us a clue about also how are people positioning themselves before the announcement comes out on Friday. I think we're seeing a lot of that today. If you look at the S&P, and if you look at it from 4350 to about 4380, in that range, about a 30-point range, we're about in the middle of it right now. So we've gone, in that sense, over the last 5-6 days, we've gone neutral. We're at the midpoint of that price action that we've seen. So I don't look for a dramatic move to the downside tonight, for example, in Asia, unless there's another reason for this market to stimulate that. So the S&P is somewhat orderly in the regard of that range that we've seen over the last 5 trading days. So I find that kind of interesting. The other thing is that everybody's waiting for inflation at 2%. And Mark, what gets me about that, not only us in the United States, but around the world, we hear so many, the ECB, we hear so many other central banks, the RBA down in Australia or our friends in Canada, 2% inflation rate. Well, is that a statistical significant number? No. There is no statistics backing that up, that 2% life is good. It's a number that it seems the marketplace or the central banks have chosen as a good number for the economies. So the concern is the Fed to get to 2%. We're at 3%. Is the Fed going to increase interest rates to get to the magic 2 and dump us into a recession? The economy is slowing. That's one of the things the Fed's looking for. And so where people are saying, well, geez, give them a break. Give this economy a break. When the Fed changes an interest rate, what we want to remember, it takes 6 months to 18 months for our economy to feel it. You and I see the market react instantly, but the economy doesn't. And that's one of the reasons why people are saying, pause. Let's give it a time to soak in. The other issue when we think about this, at 3.5%, actually it was 3.25%, back in 2007, That's when we hit our high in the stock market. Our recession began when interest rates were at 3.25, and we're back there. So there's that sensitivity as well, too, that the market feels. And I think it's reflective in what we're seeing. So right now we're somewhat going neutral. Going into Friday is the way I look at this. I don't look for dramatic move down overnight unless we get something new to stimulate that. And I don't expect the ECB or the Fed to change the script. There's no reason for them to say we're going to have to be more aggressive on interest rates for either bank. So I think they're going to keep it status quo and allow the market and allow a pause in September. And then after that, we'll see what they want to do. And in fact, they may hint to that, right? Based on economic numbers, we will then make a decision, which is typically what they say and what they should say. So that's how I'm kind of parsing the S&P here right now. I just add one more thing, and the weakest out of the indices is the Dow. That's backed off more than all the other indices in terms of its price movement. And the Russell also is in a very neutral position for tomorrow. So is the NASDAQ. So it's an interesting day today. Not what I expected, but it's an interesting day.
An interesting day indeed. As you mentioned, a pretty action-packed day out there in the E-mini. 3.4 million contracts. Just crunching the numbers while Dan was talking, listeners. It's the usual confluence of paper in the front portion of the curve. The contract expiring in a few minutes, so straight 0-day listeners, 20% of that paper. 20% as well for the contract expiring in 1 day. You add on the next contract that's expiring in 4 days, you're up already to 48% of the 3.4 million contracts expiring within 4 days. You go out to 5 days, that's 1.4%, so you're almost exactly at 50% of the flow. Again, that just shows you how much of the S&P 500 and indeed all of equities activity is concentrated in this very, very, very front bleeding tip of the spear out there. No patience to go out even 5 days. It's got to be all within 4 out here, listeners. Intriguing stuff. As you expect, the big dog out here is the nonsense puts. They're still going up. 51,000 of the 37.5 puts someone sold to expire in 4 days. We're going to move past that, listeners. It is actually intriguing to see that the actually relevant puts, the 4,400 strike puts, which as we kicked off this segment, we were at 4,404. Of course, we did break 4,400 earlier this morning, rallied through it, now have done it a couple of times. Hence that whipsaw action we were talking about before. It seems like once we broke that 4,400 level, it was look out below on these puts. 32, almost 33,000 of these 4,400 puts that are expiring in 1 day. 33,000 of them have traded this week. 23,000 went up today. So breaking that 4,400 level just set off the floodgates of action in these puts. A lot of back and forth probably as we drop below, people buying them, rallying, selling them out, hopefully scalping some money out there. Hopefully not the other way. Hopefully you're not selling those puts and then scrambling to buy them back. But I'm sure a little bit of that mixed in there as well. 5,100 yesterday, 2,500 each Monday and Tuesday. So a lot of opening paper on these 4,400 puts pretty much all week. And then we go beyond that. We go out to the 38.75 puts going up this week, 38,000 times. We'll skip those because those obviously a little bit closer to the fire than they have been in the past. People picking up their nickels, all that on Wednesday. We'll skip beyond that to the 4,400 puts that are expiring in a few minutes. These are pretty active all week long as well. 26,000 of them going up this week. 18,000 of that going up today. 5,000 yesterday, 2,500 on Tuesday, not too much on Monday. So intriguing stuff out there, opening all week long. So again, once we broke that 4,400 level this week, it just opened the floodgates on all of these near-dated puts. 4,410 puts expiring in a few minutes, going up 17,000 times this week. Again, the lion's share today, 13,500 today, 3,000 yesterday. The rest, such as it was, scattered throughout the week. If we go back here, we skip some of these 3,700 puts, some of that nonsense. But there are some calls to be found. Not many, but there are some. 24,000 of the 4,500 calls expiring tomorrow, going up this week. Again, the big day today, 11,850 today, 7,500 on Wednesday, 3,200 on Tuesday, 1,300 on Monday. So interesting opening paper throughout the week on the 4,500 strike. For their sake, I hope it was aggressive overwriting, because it doesn't seem like we're going to be threatening the 4,400 strike by tomorrow. But then again, crazier things have happened, listeners out there, in the S&P. But again, about 24,000 of those. Intriguing stuff out here. 4480s of the 4500s, too rich for your blood. About 20,000 of the 4480s going up. 16,200 of that today. So again, today just opening the floodgates, not just on the 4,400 puts, but on just about everything. An explosion of paper out there today. I think once we broke that 4,400 level, really just set the markets into a tizzy. Of course, we have Jackson Hole and Powell coming up tomorrow, so that's also driving a wee bit of this paper. But like we said, there's almost no point in going further than 4 days out, 'cause that's pretty much half of the paper right there, listeners. And it is, for the most part, a put palooza. Some calls to be found out there, 4,500s and 4480s out there as well. But scrolling here really quickly through the tsunami of paper that is out here, listeners. And again, once you get beyond a few days, it is impressive how much the volume dries up. The biggest print beyond that, we have to go out to the September 4,200 puts, went up about 11,000 times this week. And that's kind of the biggest trade beyond the 4-day, 5-day window we were just talking about. I take it back. The regular SEPs at 44,000 puts with about 22 days to go have gone up about 26,000 times. So there is one big print beyond that, but not many out there. Mr. Dan, a lot to unpack here in equities, but we have time probably for one more complex. Where should we go next, sir?
That's a tough one, because currencies are really interesting. Metals are interesting. I'll give you a choice. What would you like to do?
I get to choose on my own show, sir? I'm not prepared for this.
Yeah. I mean, we can talk about the dollar. The dollar really, and it has an impact on energy. It has an impact on the equity market we're seeing, and the dollar is stronger today. Shall we talk about that?
You want to go to FX? We can do that, sir. Or we can, you mentioned metals. There are 3 precious metals lighting up our light side this week. We have silver, we have platinum, and we have palladium up there this week as well. Only silver really doing some.
Gosh, that's a good one, too. Okay, let's look at metals.
All right, then, to the shiny stuff we go, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, there, listeners. Welcome to the shiny stuff. Pop out of the equity indexes, go down almost to the bottom of the list, one from the bottom to metals. We're going to hang out in precious. I already broke down the size for you earlier today. We have 2,900 contracts for platinum, 12 for palladium, and then number 2, light side mover, up 7% this week. Silver with 40,000 contracts. We're probably going to hang out there. By the way, if you're wondering how much paper gold has this week, about 100,000 more, 144,000 contracts on the tape for gold. Mr. Dan, we obviously have those 3 precious lighting up our light side. What is catching your eye in the world of metals this week?
Well, the one that I think is most interesting is silver. But just a quick thought on, you mentioned platinum and palladium. We want to think about those in terms of the auto industry. One of the main consumption of those products are in catalytic converters. And what we're seeing in China is a bit of a slowdown in some of their auto production. And that has an impact also on the consumption patterns for those markets. And we also had an issue with one of the mines, I think, in South Africa, if I remember correctly, and that's had an impact on that. But those are also somewhat thinly traded. The silver market really does fascinate me in terms of its momentum, the action that we've seen compared to gold. Gold's really lagging behind compared to silver. And that's not necessarily unusual. Another market that can lead the way for these, it's a base metal, but it can lead the way, and that is copper. But if we look at silver now, silver's kind of catching its breath today. Doesn't mean the rally is over, but it thrives on excuses. I think of the gold and silver market as an excuse market. So if we have a weaker dollar, you expect gold and silver to rally. Now, the dollar got stronger today. We see silver a little bit weaker. If we have inflation, if we have uncertainty in the world, we expect these markets to respond to that. And yet, we haven't had any drama, but we do see silver really off to the races. It's what we saw yesterday. And today's action, even though it cooled off a bit, is not dramatic. It says a market that's catching its breath before Friday. Now, if the Fed comes out and says, I think we should pause in September, or indicates that they may do that, that means the stock market theoretically should firm up a bit. The precious metals should cool off a little bit more. They should come back. But silver has really shown unusual resiliency. So I'm really looking forward to seeing how silver reacts to Friday's announcement. Does it back off? Does it back off, let's say, towards that $24 range or $23.70 or so, and then it bounces back up, which says they bought the break? Which says something about longer-term positive action in that market. So I think how it behaves tomorrow is going to be interesting. And Mark, for all these markets that you've been, guiding us through here, Friday, it's so interesting because people have to make a decision about the weekend, because these markets don't start trading again until Sunday night, 5 o'clock Chicago time. And so are people willing to hold exposure in these markets going into the weekend? I think that's something else that tomorrow will show us. So if silver does break lower and it leaves that long shadow on the bottom, it says that people were willing to hold on to this going into the weekend. However, if we break tomorrow, if we're back towards 2370 and we close there, that shows a lack of confidence going into the weekend. So it's really a fascinating time in these metal markets.
Fascinating time indeed. Silver right now, listeners, right around 24.20, up about 1.5 points or about 6.4%. So a nice little pop for silver this week. Uncle Mike will be happy. So of that pretty much 7% upside since our last show, 6.4% of it coming since Monday. So nice little near-term rally here. Again, about 40,000 contracts on the tape. What is the vol in silver right now? It's right about a 20, a little bit below that, 19.75, off about a point. So all things considered, it's right about in line with some of the other products we see out here in terms of vol. It's not threatening a 30, but it's not, single digits like the rates either. It's somewhere right in the middle there. In terms of skew, not a heck of a lot of evolution out there. The puts 1.5% cheap. Last week, this week, they're flat. The calls last week, about 3% bid. This week, about a little bit less than 1% bid. And usually, historically in the metals, we expect to see a little bit of a bid to the calls, a little bit of discount to the puts. It seems like we are seeing that throughout the term structure here in silver, but ever so slightly. You have to go all the way out to, let's see, about 40 days to start finding 5% bids to the calls. And you got to, October, November, that time frame, and into next year. Then you start to see 5-6% bid to the calls. So longer term, it gets a little bit more bid. In the near-dated stuff, not so much. And in fact, it's all near-dated this week. 37% of that 40,000 contracts going up in the contract that expires in 4 days on the 28th. So interesting stuff. And of that, it was the 24 half calls that were leading the dance. I said we're at about a 24.20 right now. 1,700 of those going up this week. 800 today, 800 yesterday. The rest scattered throughout the week. Looks like opening yesterday, probably opening today as well, unless they put them on and quickly took them off. Again, we are seeing a flurry of very near-dated paper across all the complexes these days. So it could be a little bit of quote-unquote 0 day, or in this case 4-day trading out here in silver. Putting them on yesterday, taking them off today for a little bit of a profit. And then right behind it, we have the 25 calls going up 1,500 times, 1,000 of that on Wednesday, about 400 today, the rest scattered throughout the week. Looks like mostly opening yesterday as well. So 24 halves and 25s opening for size yesterday out there in silver. And right behind it, we have the 24 even calls. Those are now in the money, 1,200 of those. 400 and change on Wednesday, 300 on Tuesday, almost 400 on Monday. Back and forth opening to closing, which makes sense. Once we kind of break through it, they become in the money calls. People may be taking those off. Not much today at all. Only 3 going up today, which is kind of strange given that they are in the money. If you want to find some puts, you got to scroll down a bit, listeners, to the 23 half puts going up about 700 times. 575 yesterday, 125 today. And then the rest, such as it is, scattered throughout the week. Since we're hitting on the precious stuff, before we get out of here, let's do it real quick. Sojourn into gold as well. Obviously, a little bit more paper, about 100,000 contracts on the tape. Gold at about 19 and a quarter when we're kicking off the show. Of that 144,000 contracts, 27% going up in the October contract has about 33 days to go. So we're going to hang out there. The vol and gold at a whopping 11. So again, just shows you silver almost 2x that, a little bit frothier out there. Not much going on in the skew, so we won't even bother out there. 2.6% bid with the calls last week, 2% this week. So nothing really to be found out there from a gold skew perspective, which in and of itself is interesting. Looks like the big dog out here this week in gold options. It was the 19 half calls, which are about 25 points out of the money, pretty close to it. Those going up almost 5,000 times, about 4,800 times this week. The big dog for those Tuesday, 3,100 on Tuesday, mostly opening there. 700 today, 600 yesterday, about 400 on Monday. So it looks like opening earlier in the week, closing later in the week. So maybe as we're rallying towards that 19 half strike, buying some of those calls earlier in the week, dumping at least some of them later on in the week. Behind that, we have 2,000 of that strike, the 2,000 strike, 2,000 of the 2,000 calls going up this week. So a very appropriate number of that, about 1,200 going up on Wednesday, almost 400 today, almost 500 on Tuesday, and a couple going up on Monday. Looks like opening earlier in the week. So intriguing stuff. 2,000 of the 2,000 calls. You like that strike, listeners? Looking a lot closer than it did, let's say, a couple of weeks ago out there. And let's go a little bit farther out. Let's just see really quickly. We have 1,800 of the 21 half calls. So of the 2,000 calls, not optimistic enough for you. Nearly 2,000 of those, 1,000 on Monday, 800 today. The rest scattered throughout the week. And there are some puts to be found, the 18 half puts. Not many, 1,500 of those. The big day for those, 600 on Tuesday, 400 on Wednesday, 300 on Monday, and about a couple hundred today. But before we get out of here, listeners, let's do a real quick futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback, where you guys ask us questions. We also turn the spotlight back on you. I want to turn that spotlight on Dan this week as well, get his thoughts on our question of the week. Right now, Dan, we're asking him a question we've asked a couple of times this year to get their pulse on these markets. The last time we asked it was back in May. At that point, cash was king. So we're asking you again, in these troubled times, listeners, where are you allocating the majority of your portfolio? Cash, fixed income, equities, or commodities/crypto? Mr. Dan, what is your vote right now? And more importantly, what do you think our audience is voting for, sir?
Well, I'm still heavily exposed to the equity market. Excuse me. It's from a longer term point of view. My stock portfolio has basically been long since March of, 2008. And I don't see any signs of changing that right now. So my allocation is primarily in that area, probably 80% to that range, and then also cash. So I do have some fixed income, but also cash. I have some there that allows me some flexibility if I wanted to put it in other markets. The crypto, in terms of the crypto market, I have zero. If I was going to do anything in crypto, I would look at the futures contract just because I want the protection of an exchange in that market. And that's a market that's really still trying to figure out what it is and what drives it. So I haven't done anything with that on a cash side or on the future side, actually, in the crypto space. And the commodities, I do think there's some room there to look at opportunities. And again, for me, I would look at futures if I want that space because it's a pure play. It's clean. And again, I have a regulated, cost-effective way to put that money in, less capital than I would on some of the ETFs that I could look at as well. So that's how I would approach this.
All right, listeners, that music means we are coming up against it here. Let's check in really quickly. If you want to play along, Ad Options is the place to vote, listeners. You have about a day left on this poll. Right now, Equities taking the lead, 36.6%. We were literally tied, I think, 35.9% each on the option block a few hours ago. So the poll continuing to evolve. 34.1% right now for cash, coming in at number 2. 19.5% for fixed income and commodities/crypto. Bringing up the rear at 9.8%. Get in there, Ad Options, make your voice heard. Listen, folks writing in for income and volatility. No time for those types of nuanced things. This is a very keep it simple type of poll out here, listeners. So get your voice in, make your voice heard. And Dan, that's all the time we have for our voices this week. But if folks want a little bit more of your voice during the rest of the week, where should they go? What should they do, sir?
Well, they could go to dangramza.com. It's a website that provides a daily free video. There's also a course that talks about the techniques that I use for trade identification and risk management, trade management, and then a more in-depth video. But I would say you go to the free video. It lasts, 2 minutes to 4 minutes, depending on what's happening. And we look at 22 different markets, 6 different sectors. So I'll pick out different markets that are moving that we talk about on a daily basis. And the idea is if you don't trade futures, a place to begin is just watch them. And this could be a place to watch them. And then it's just my thoughts on how I see them unfolding. And you and I can look at those markets on a daily basis. You can also go back, I think, 9 years of previous videos. If you wanted to see, okay, what did Dan say when this happened? You could go back to that date and watch that video. So that's another possible source of info.
There you go, dangramza.com, the place to go. You already know where to go. Check out all these reports we have cooking over here for you. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires out there. Listeners, that is going to do it for us on TWIFO. It's also going to do it on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down the mad world of equity volatility. A lot to unpack there. Should be a fun one on volatility views. Back after that, exclusively for you pro folks, with a little bit of the old options oddities. Then back again on Monday with our kickoff show of the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.